Hey everybody, Brice Carter, Chief Investment Officer here. It's been just a few days since my last market update, which should be in your email inbox if you haven't had a chance to read. But as many of you know that have been with us for years, we have a strong commitment to keeping you informed. We want to be proactive in our communication, sharing our thoughts with you. The markets have had a wild couple of days, so I thought I'd drop in and just share our thoughts. So what we're seeing is really a reaction to the tariff announcements from last week. Now, market, widely speaking, was expecting roughly 10% reciprocal tariffs, and what we got was closer to 25%. Now, our take is that many of these 10% reciprocal tariffs are going to be here to stay for a while, and the larger tariffs on some of the more bad actors in the trading world are going to be staying here for a while until negotiations can happen, which we think are ongoing right now, and there's been some signs there's positive updates there. Now, what we're doing, you're going to see in the next few days likely a lot of portfolio changes. Now, this isn't us day trading or gambling with your money. We're likely going to be increasing the duration of our bond portfolio, which means safer bonds and higher credit quality, and they're going to do well in an interest rate cutting environment, which is certainly what we expect. We'll see some rebalancing back into some equities that we feel like are oversold. And what we'll also see is a lot of tax loss harvesting for those that are non-qualified investors or have non-qualified accounts. That being said, we're going to continue to monitor things to make sure if there's any adjustments that need to be made, we will make those adjustments. Now, if you're feeling some panic right now, that's normal. I encourage you to calm down. Not to get myself in trouble by saying that, but markets will fluctuate, and we will have these big downturns. If you want to call this downturn big, I mean, we are looking at some big swings intraday, certainly. 5 to 7% is not a common thing on a day-to-day movement basis, but is becoming more common. And one of the reasons for that is all the computer and algorithmic trading that's happening. So what we're seeing really is indiscriminate selling. Companies that are not impacted really by tariffs and trade wars are still getting sold off with everything else. And that's the computers jumping in and the algorithms jumping in and sell. So we see these larger intraday changes than maybe we used to when my dad started in this business in 1988. And really, it doesn't matter if you've been investing since 1988 or you just started last year. Predicting when the market is going to bottom, or when you should get out, when you should get back in, it doesn't get any easier or any more probable after 30 or 40 years of investing than it does 3 or 4 days of investing. And so that would be the main message I'd like to communicate today, is staying with the plan, knowing that we're being proactive and doing our job. And I think an interesting fact to point out is that if you had invested $10,000 into the S&P 500 back in 1980 and you stayed invested, you'd have about 1.635 million roughly as of March 31st. But if you missed the 5 best days, just the 5 best days, you're looking at just under 1 million, or just over 1 million. So you had a $600,000 difference just by missing the 5 best market days in the last 30, 40 years. And so I think that's a really important to remember, is that it's impossible to time the market. It's all about time in, not timing. We're being proactive. If you have concerns, certainly reach out. We're here to talk to you. Your advisor's here to talk to you. We can adjust your financial plan, look at those things holistically. But let's not make rash decisions on intraday market moves. We'll work past this just like we did COVID, just like we did the crash of 22, just like we did the crash of 2018, just like we did the crash of 2008, just like we did the tech bubble in the 1990s and 2000s. I wasn't quite here yet, at least working here, but we worked through those that markets perceived. Thank you, and again, thank you for your trust and confidence in us as your investment advisors.